We've got an interesting setup with the Bitcoin chart right here. Bitcoin ended up continuing to peak and peak and peak and peak above our resistance area. We actually got above it, right? I mean, if we drop a horizontal line right here and then zoom out a little bit, we can actually see that if we look at that FTX high that we set just before the big drama started, we actually managed to get above that with our wicks. And to be honest, guys, we even got above it with our candles. Take a look at this. Not quite, roundabout. And so that to me is painting a very promising image. But then we got the other thing that I warned you guys about, which is, basically a swing failure pattern where we keep trying to trade higher and higher and higher. We basically deviate above our resistance, right? Because if we take a look at this, our resistance level was here at this green line. We managed to get a little bit above it. So what ends up happening is we get some people entering long positions a little bit too late, and then the market drops back down, right? That's what results in this wick, and of course the subsequent drop back down. And that's what we've seen so far. Now, what's important to note about drops like what we're in right now, let me just remove that line. What's important to note about drops like what we've just kind of suffered right now is that these are, they have the potential to drop very low. If you take a look at this and just kind of replay the chart back a little bit, you'll really understand what I mean, right? If we replay it back to this candle, let's just go one candle forward. These kind of drops, they have the potential to, just retrace, basically like the whole rally, right? It's basically, as far as I'm concerned, a bot pattern, but the reason they stop dropping is because the market just grabs enough liquidity, right? So if the market has grabbed enough liquidity to where it's satisfied and, dropping down, and by market, your HFT bots, the market manipulators, exchanges, whatever, whoever you think is colluding to do this, it doesn't really matter, but when enough liquidity has been found, then you can kind of reel it back in. And of course, another element, which isn't so much about manipulation, but just normal kind of situations in markets is, the dip, which is what this is, gets bought up, right? And when the dip starts getting bought up, that's when, of course, we start to see a little bit more excitement. If we replay this back again just to this candle right here, you can see that pretty clearly, right? This could have easily turned into a much bigger dump, but it just happened to be that buyers were ready to step in, and we know exactly why that was. If we take a look at this on the 1 hour time frame, I've already been showing you the 1 hour Ichimoku cloud, and yeah, we've managed to find support in this cloud. Now, we haven't come out of it, right? So really what finding support would mean to me is we kind of just jump up out of the cloud, and we're not doing that. In fact, the cloud is closing up, and if I replay the chart back to where we are right now, we're not looking particularly great, right? We're hanging around this area for a little bit too long, in my opinion. But all of this, we need to put it in the context of what happened before. What happened before is Bitcoin, we can barely even see it now because the big move was so big. But, Bitcoin was pretty much non-stop moving up for quite a while, since this high, since this low on the 30th of December, literally the day before New Year's. It's pretty much, you look at this on the daily time frame, there isn't really any pullback on this chart, right? It just kind of starts off slow and then goes absolutely fucking crazy. So some sort of a cool off here, very much warranted at this stage, right? Whether we get a Fibonacci retracement or just a time-based correction, I told you guys that I'm expecting a correction. That can happen with price or that can happen with time, but in some way the market will, I don't want to say punish us, but the market will take some payback for the joy that it gave us. The cool thing is that we've fallen down to our 236 retracement level. I told you guys that I was looking at the 382 levels. Right now, that 382 level lines up at 19,600, and depending on where you draw this, you can actually draw it from here, and we haven't actually quite hit that 236 as well. I think both fibs are valid because this one is just before the big rally started, but this one is our trend cycle low. Both are very important, and we haven't hit the important Fibonacci levels on both either. So does that mean we could see a bigger dip now? Potentially. The good news is that if we do, we've got a lot of support. Take a look at this, right? If we just kind of hold out for another couple days and then fall down here, literally kind of 3 days from now, we're going to have good support in, all throughout the $19,000 range, literally from the very bottom of the 19K range right up to the very top of the 19K range. We're going to have very good support, and that is a really good sign. There's no two ways about it. That is a very, very promising sign. We've got the same thing with our momentum, right? We take a look at this on the daily EMA ribbon, and this is still moving up very nicely. Of course, a little bit slower now. We are starting to flatten out this, kind of rally up a little bit for the momentum moving averages here, but it's still really good. This still indicates to me that, the market could really pull back quite deep, and we're going to be completely fine. And that is a really good sign to me. I mean, we know how important these price levels are. If I just take you over to my Coinbase chart where I have my main lines drawn, I cleaned it up a little bit for you guys because it was getting confusing. But the main level for me has been this kind of, green box right here. And this is still looking absolutely great. Still definitely showing me that we've got quite a promising setup to find support in this range if the market does want to pull back a little bit more. But of course, the thing that we need to be thinking about is, that we could definitely find ourselves in a situation where the market isn't kind enough to give us the support that we want, right? We might not get that support that we're looking for because, when we're in an aggressive uptrend, Bitcoin doesn't like to retrace that much. So I think that's something else that's worth keeping in mind right now. One of the potential patterns that I think we could be entering right now that probably no one's even thinking about particularly much is some sort of a just kind of sideways channel, something that would look a little bit like this, right? So we've already managed to move up. Now we're kind of consolidating, and then potentially getting ready to make that next leg up. So again, price-based correction, right? This is a time-based correction. This is an example where the price isn't really dropping, but across time we're feeling that pain, so to speak. And this, I've said this a million times, but this paint's your classic staircase pattern where you move up a little bit, you trend sideways, you just chill, relax, you consolidate, you give the bears an opportunity to sell. I mean, really, just to break down for you what's actually going on. It's one thing to say that you kind of do this and then move up again, but it's another to understand it. What's happening here is that within an uptrend, there's going to be some level of buying pressure and some level of selling pressure, right? And naturally, you're going to have a lot less selling pressure compared to the buying pressure if the trend is moving up. That's why the order books move up. Now, what happens in these sideways ranges is our buying pressure and selling pressure start to equalize, right? Now they're equal. They're sitting at the same level. Now it's about, can we keep the buying pressure steady while the selling pressure kind of erodes and drops down? And when we start, basically what this is saying is like, let's say there's only 10,000 people that want to sell one Bitcoin each. As long as the market can keep absorbing that in ranges like this, eventually that selling pressure is going to be finished. It's going to be eaten up by the market. And then if the only thing you have left is that kind of long-standing buying pressure, but selling pressure has managed to drop down a little bit, now you're in a situation where the price can start rising back up again, right? So that's potentially what I think we could be in right now. It's what we've seen a million times. This is probably the single most basic chart pattern that exists in all of trading history in all markets. It really doesn't get much more simple than this. We see it really nicely playing out in the opposite direction on the downside, right? Take a look at this. Move down, trade more or less sideways. Sometimes we kind of trend upwards a little bit, and then move down, right? Sometimes we trend downwards a little bit and then we move down. But it's the most typical pattern. We see it on smaller time frames like this. Bam, look at this. That's a little consolidation range. Trend continues, right? Look at that. Happens all the time. Very, very typical. Here's another big example of it happening, right here. Trend down. Big example of that kind of consolidation, and then the market is ready to continue down. So super, super typical price action. We can get even more profiled kind of pullbacks that look a little bit like this. Move up, pull back, move up again. Same thing. This is just more of a price-based correction, whereas something like this is more of a time-based correction. But that's it. There's literally only those two corrections that the market can produce, and that's what I think we have a decent chance of being in right now, because we've got a really good situation here where we're getting look at that support right here on the 4-hour time frame. We've got a lot of support going for Bitcoin right now, a lot of things in Bitcoin's direction, and to see a cool off is very much anticipated. It's really nothing that's out of the ordinary or particularly surprising. If we take a look down here at the volume, we can see a really nice trend where the volume moving average is rising up. The volume itself is pretty nice and high, and then when we start consolidating, the volume is diminishing, showing us that this isn't the real price action for the market. The price action that the market generally quite agrees with is where the volume is peaking, and that's when the market was really picking up again. So I think that this again is more indication that we could be in a pretty nice situation, I think, for Bitcoin, and that is certainly something that I'm looking forward to seeing how it may play out. Now, I think that if we are able to clear this kind of high, from that pre-FTX kind of dump with some significant headroom, then I'm certainly expecting that Bitcoin can get up into into its next key resistance range, and for me that is going to sit between $22.7 and $24,000, and that's just on this chart. But I think you could also just kind of more broadly say that its next real area of resistance will be up at 25,000. I think both are pretty fair, valid areas to paint as resistance for Bitcoin. These are extremely important price levels for Bitcoin to break, and I think that the momentum we might gather from potentially breaking that high that we set before the FTX drama, I think that momentum could really carry us quite high, especially if we get a good kind of period of correcting here in order to let the market regain a little bit of its breath after such an intense move. To come out of a range like this and then immediately get into a strong trend like this is very much out of the ordinary. I mean, it's completely not normal. It's not really even healthy, and that's what I was saying to you guys as we were in it. So I think that these are important things to be keeping in mind as we're going through them right now. If we do manage to get that move up, just kind of between here and this next resistance level is a huge 16% range. I definitely don't think that something like this is particularly tradable, but with a little bit of headroom, it can start to become a little bit more interesting, right? Because we could very much just kind of fake out and then come back down. But if we clear these areas where we could fake out and then kind of play the rest of it, we get a smaller range to trade, but I would argue that it's a safer range to trade. 11% right there, slap on 5x, 10x leverage, as an idea that I'm considering, could turn into a pretty nice profit. And I want to remind you guys that there are still some really cool bonuses available to you with Bybit. They're advertising 5K right here, but they've actually got 30K, which you can get when you go over to the top left of your screen on Bybit and then the rewards hub. You can get up to $30,000 in deposit bonuses when you follow those steps right there after signing up to Bybit using my link in the description down below, and putting a 50% profit on the 30K that they give you for free would let you take home $15,000. I'm not saying that that's a trade you should take. Obviously, it's something I'm considering, but what's really cool is that they're giving you that money, which is completely free of charge. It's that they're just giving it to you as a bonus when you make your deposit and when you trade on the platform a little bit, and you get to keep that money and trade with it. So that's what's really cool, is you can just kind of because it's not your money, you can just kind of chuck it into anything, and if you make money with it, you can withdraw that money. So it's up to 30K. They're only advertising 5 right now, but if you go over to your rewards hub, you'll see it. I actually had to clarify this with them on the phone today. I was on the phone with my guy at Bybit. I was like, yo, clarify this for me, because I keep saying there's a 30K bonus, but it's not visible to the public. It's not. You'll only see it when you sign up and then go over to your rewards hub and make those deposits and stuff. So go ahead and check that out. Prime XBT, a little bit simpler, but the bonus is a lot smaller. They're offering you up to $7,000, and that's just whatever you deposit, you get 7% of it back as a deposit bonus, which is very generous indeed. Very, very simple and straightforward. And the cool thing about Prime XBT, of course, is you're getting all of these traditional finance markets right here, between the S&P 500, commodities like gold, silver, and oil, and Forex as well, in addition to, of course, the standard crypto assets that we know and love now. So that's a really, really cool opportunity. In my opinion, Prime XBT is a cooler offer just because they offer traditional markets. That is so cool. They're well worth checking out. And like I said, with up to $7,000 in bonuses, it's the same deal. I mean, you can chuck that into any trade you like, and you're I mean, if you don't make money, it doesn't matter because it was never yours, and if you do, you can withdraw it. So that is really, really cool. A lot of people always wish that they had more money to trade with in the markets. They had more firepower, that they could just tap into the power of compounding profits a little bit faster. What Bybit with its 30K offer and what Prime XBT with its 7K offer are giving you are exactly that opportunity, and it is well worth checking out for that reason. There's no reason to wait around, because the trading opportunities are all very, very fruitful and plentiful at this moment in time. Now, if we take a look, we're obviously on a Thursday today. If we take a look at the dollar and see how that's been moving, we haven't seen much progress here. We've seen a little bit of a spike and then a little bit of a dip, and now we're just kind of back to where we were before, which in my opinion is good news, because after a little bit of nothing really, Bitcoin is still holding fairly strong, right? Previously, when this kind of thing happened with the dollar, Bitcoin was weak, and Bitcoin suffered, and Bitcoin was punished, but we're not seeing that right now. So I think that's a really good sign. if we take a look at the S&P 500, this is actually what I was warning you guys about that could end up happening, which is where we could see a rejection off this line right here. We did see this rejection now. Obviously, a few days ago, I was making a video about this, saying that, this is a resistance area. Nobody really wanted to acknowledge that this was a resistance area. The chart looked like this at the time. I was actually making this video with MDX Crypto back then, and he was also fairly positive that, he did say that we could get a little rejection, which is what we've had right now, but broadly speaking, people were not super, how do I say, keen on saying that the S&P 500 could have gotten a rejection here, but that's exactly what happened, and that means I've got even more good news for you, because look, it's not a crazy rejection, right? And I'm not expecting anything much stronger than this. I honestly think that, we could kind of drop down to like here and then be done, and then, kind of test it again. That would make a lot of sense to me. I think the S&P 500 has a really good chance to rise up, and I think a lot of that is going to depend on what happens to the dollar, but I do certainly think it's in a good position. But with this in mind, even though it's not a big drop, the fact that it is still a drop, right? And with this in mind, I think we're doing pretty decent, guys, because Bitcoin hasn't suffered that much, in the wake of this. Bitcoin is right now, it's trading where it was. Let's actually calculate this. Bitcoin now is trading where it was, 2 to 3 days ago. S&P 500 comparatively, hasn't been here for over a week. So, it's clearly holding up stronger than the S&P 500. And this comes at the same time where, if you've been a long-term subscriber of this YouTube channel, you're going to know that I was talking to you about weekend volatility, Saturday, Sunday volatility, and how Bitcoin hasn't had much over, basically like the last year or something stupid, like a very, very long time frame. Bitcoin hasn't had very much volatility on weekends, probably like over the last 6 to 9 months, and we finally started to see that. I actually pointed that out specifically in one of my recent YouTube videos, showing you that it could be a sign that Bitcoin is potentially, at least temporarily decoupling from the S&P 500. So that is to say, starting to perform independently of the S&P 500, which is really good, because that's where we start to see a lot of money coming into these markets. That's where our pockets as crypto holders start to get filled up a little bit more. So that's a good sign, and we are seeing the follow through of it. I told you when we started to see that with that Saturday kind of piece of analysis, we're seeing this stuff coming from a mile away, guys, and that's just because I've got a team behind me. It's not just me. That's why we don't miss stuff like this. And by the way, that's why we're able to put out so much valuable content for free into that _Gold Telegram channel, which you can join by following that link in the description. And by extension, it's why our VIP group is so comprehensive. We were able to see this from a long time coming, and now we're seeing that actually coming into fruition as well. So I think the big thing to kind of take away from this video is that while, we're not in a, we're not in like a, I was going to say we're not in a 10 out of 10 position, but to me, this is as close to perfect as real life gets. We rallied up really nicely. We've been kind of pushing our highs. We pulled back, but we didn't pull back too low. We're just kind of holding our general area of support, basically forming, a very classic kind of bull flag that could, lead us to breaking up higher. And this is happening while the S&P is displaying a little bit of weakness, to be honest. I think it's a really good sign. I think Bitcoin's in a good place, and I'm happy to see what we've got here. I think that, now that we've been able to pull back a little bit, we've had a good chance for our support to catch up. So we're kind of ready to take this to the next level. Even if we pull back deeper, we've got a lot of really, really good support anyway. Daily Ichimoku cloud is completely closed off and turned into support for mid-February. This is very far away and very low, so I'm not particularly worried about this right now, but it's another great sign because we haven't seen the Ichimoku cloud close up for a long time. I want to point this out to you and make this very, very clear. And this is also something that I've spoken to you about previously. So those of you that are subscribed are going to know all about this. But the last time that we actually saw the Ichimoku cloud turn green, just like it has done now, was up here. This was May of 2022. And the last time that we saw, any sort of substantial green Ichimoku cloud was here on the 8th of October in 2021. So that is over a year ago. Since we've last seen something like that, and I don't know why that's vibrating. There we go. Sorry about that. And so that is something which, I think is worth paying attention to, because we haven't developed this into a big green cloud yet, but it still is a very, very promising sign, because when we start to do things like this, it's generally, you look at the last time that we got a big green cloud that developed in this market. It was like over here right before the huge bull run from, I mean, this was basically at $9,000. We went up to 64K within this kind of, trend right here. So, I mean, the Ichimoku cloud turning green is a good sign on the daily time frame. I mean, it generally is something that correlates with really good things. It doesn't cause good things, obviously. None of this TA is the cause of anything good in the market, but we're looking for correlations and patterns that could potentially repeat. Things that have happened in history that we can extrapolate into the future, and that's our job as technical analysts, really, at the end of the day. And then and then we're I mean, I'm not, I don't have any shame in saying it. You are ultimately just kind of, rolling a weighted dice, taking a calculated risk, and putting your best judgment forward with every step you take. And that's why across a long enough time horizon, you're actually able to remove luck entirely, because while each individual kind of trade you might make is purely based on luck, if you're making good trades, if you're exercising good judgment, if you're following a good system, then you remove luck entirely. And as long as you're doing those things, it's actually impossible to lose money, pretty much. And I know this might sound crazy to you, but we dive really deep into the theory of that kind of thing with the Foresight Academy course, which you're going to get for free when you join VIP for most of you. So you can get yourself inside by following this link in the description to join my free Telegram channel, and then clicking on my name at the bottom of any post, and then send message as well to ask me how to join. I want to remind you guys again about that Bybit reward by going onto the rewards hub, getting up to $30,000 in deposit bonuses, which you can use to trade with. Any money you make is yours to keep. If you don't make money with it, it's basically like demo money, not yours to begin with, doesn't matter. Prime XBT offering you the same thing up to $7,000 with access to traditional finance markets using just a Bitcoin deposit. Very, very cool. Just completely removes the red tape from using, my God, normal brokers. This is way, way better. So go ahead and check them out with the links in the description down below. Hope you've enjoyed this one. Good video here, and I'll see you all in the next one. Hit that like button, subscribe, click the bell, and yeah, I'm out. Cheers. Bye.